Baseball season officially begins, and here on Wall Street, we want home runs, not a strikeout. So joining us on the sidelines is Matt Cheslock. Hello, Matt.
Hey, Boz. How are you?
I'm well, thank you. You going to watch some baseball tonight?
No, I think tonight's hoops. You know, we still got the Sweet 16, the Final Four, so baseball's on the back burner for at least a couple weeks.
All right, that's true. They have a lot of room to run. Speaking about room to run, I want to go over some sectors with you to see who's overextended, who maybe has some value, but I want to go over the general market first. S&P keeps testing its 20-day moving average, which is shocking. I didn't know that little guy had so much power. With the trade talks continuing at the end of the quarter, Matt, are we going to budge?
I tell you what, we keep failing here on some of these rallies that we've had. We keep talking about the inverted yield curve, and that's been the cause. And then the trade talks heat up again, and we get the rally, and then they seem to die off, and the market dies off. So right now, I think anywhere around the unchanged line is probably good. And you're right. How does the 20-day moving average, keep us from going higher? But certainly right now it is, in the absence of any news breaking or newsworthy subsidence talks out of U.S.-China. This market seems to be stuck.
You mentioned that inverted yield curve, lower rates. The banks have been widely talked about. However, while that remains the case, they're up today. Why is that?
Yeah, they've been depressed for so long. So they may have taken all they can take out of the banks in the near term. Really, they haven't acted well at all, and we needed them to be the new leader. Technology was a huge leader in the first quarter, but after that disastrous December that we had. So we need another leadership group. The transports have acted pretty well here recently, despite an overall rocky market. And I'm sure there's other sectors that you're going to get into that, haven't acted as well, but financials have been one of the laggards.
Well, let's talk about the home builders, right? They've been doing very well with those lower rates, higher mortgage applications. Are they overextended, or do you see room to run? And by the way, Matt did call this that they were going to do well a few interviews ago.
Well, you know what? I think the home builders, again, we're starting to get into IPO season here, which is going to be interesting. Are you going to start locking in some of your profits that you saw in the home builder sector? I mean, how much lower are the rates really going to go here in the near term? So you might see money come off the table here as you start the second quarter. We end that this week. So, you might want to lock in some stuff in that sector and try one of the laggards maybe if you think the economy is going to move a certain way. But you talked about hitting home runs earlier. I don't know if this is a home run hitting market. I think this is more you want to hit singles, you want to hit doubles. You want to be nimble. You want to be quick. You want to follow what the Fed is doing, not just the Fed, but the ECB as well. I mean, you want to follow these headlines, and if you can make that small, short-term trade, that's one that you're going to want to probably do.
All right, Matt. Well, that wraps it up. Thank you so much. I hope to see you next quarter. Have a good one.
Absolutely. You too. Enjoy your weekend.